Hey guys, welcome to another video. Thanks for joining me in this one. In this particular video, I'll be talking about the General Electric second quarter performance. If you follow General Electric quite closely, you notice that something has changed in the stock price. And I've covered this in the past. And for some reason, that video is actually picking up recently. I guess that's because of the news about the stock performance itself. In reality, what has actually happened to the stock price? It used to be $13 per share, and now it's around $100 per share, 102, something like that. And in fact, it's actually taking a dip. And that is because of this reverse stock split. Now, according to General Electric CEO, the main purpose of this reverse stock split is actually to consolidate the number of shares to match similar companies in terms of size, in terms of market capitalization as well. And I believe that makes sense, okay? However, with the stock price that I currently see GE at, is it something that I believe is sustainable, and is it something that I see would go up in value over time? I honestly don't think I would really see that happening soon, unless something dramatically changes in their business. Now, that is because of their past performances, not necessarily of the performance of Q2. Q2 was actually a good quarter for General Electric because they actually ended up the quarter with a lot of growth in their businesses in terms of their sectors. The aviation sector, healthcare sector grew significantly as well. Why do I then think that the stock price is probably not going to dramatically go up in value? Now, you'd notice from the 5-day chart that I have on my screen right now that generally stock price is actually taking a dip. Now, generally, the reverse stock split would negatively impact a stock price, and that is exactly what happened here. And it's slowly gone back to around $102 at this point. How is the company itself performing in terms of their numbers, in terms of their earnings, and in terms of fundamentals, all right? So let's start with the balance sheet. Now, the first thing that I look at here is the assets. As you can see, the cash and short-term investment here for Q3 2020, it gradually went up and it started to decline. And right now for Q2 2021, it's about 28, which is about $28 billion. Now, that is not a bad amount, but the decline also makes you feel a bit uncomfortable. There's a chance that this would happen because remember, these numbers are of the past. This is not really showing what is currently happening, okay? So that means that with the economy turning around, things are probably going to start improving as well, and these numbers will most likely go up. Next thing is the total inventory. Here was 14, 15, 16, and now it's 17. Now, generally, when an inventory keeps going up for no reason, it signals something as well, because when you have a lot of inventory and you are not making a lot of sales, that means that you have all these items that are valuable, but you're not able to convert them to cash or make profit or sell them. And that is not good. But again, granted that the economy is gradually just recovering, there's a chance that they may be piling up this inventory in preparation for the recovery. From Q3 of 2020 and up to Q2 of 2021, this number has steadily increased, which is not necessarily a sign of them preparing for a recovery of the market. This is more of them not being able to sell or convert the inventory to cash. And that is some form of red flag as well. Now, the most important part also is the liabilities or the total debt. Okay, right now the total debt has steadily decreased, and 79, 74, 71, 63. Now, as we know that General Electric has been working to pay down debt for the past couple of years, and they've done a significant job by paying down over $53 billion in the past 3 years since 2018. And that is a major milestone because their goal by the end of this year, they should have paid down about $70 billion. We know that General Electric has been carrying a lot of debt, and that's one of the reasons why their stock actually started taking a huge decline. Total liabilities sits at around 204, which is a good thing because the debt is reducing. And this leads me to the next thing that I look at, which is the income statement. Total revenue for Q3, 19, Q4, 21, 17, and then Q2 is 18. So gradually went up. They made some money, because the businesses, like I said, a lot of their businesses like aviation, healthcare are gradually picking up. However, a few things I'm going to show you down here. Total operating income. It's all been, we got a negative here, like a loss, and we recorded a huge loss at Q2 as well. This leads me to my next point, which is the total net income. Right now, we have a total net income for Q2 of $1 billion, which is a loss as well, negative, okay, negative $1.1 billion. Now, this is another important aspect that really makes me a bit uncomfortable about where GE sits and how they're performing. And that's because for the Q2, you can see we have a negative net income of about 1.1. In the previous quarter, it was 2.8, and here, was positive, and here again, it's also negative. Last important aspect that I want to just bring to your attention is the total cash from operations. As we noticed here, there was a loss of about 37 million, and then here it's about 1 billion again, okay? Which means that they are yet to turn things significantly around. Yes, they're paying down debt. Yes, their businesses is making money, but their operations and the ability to profitable and sustain it is not yet there. These are the reasons why I believe their stock price may not be able to actually go up in value significantly. Now, if you actually do a quick calculation, okay, GE stock price is at about, I would say about 4 months ago, selling at $13. If you multiply it by 8, GE's stock price should be around $104, assuming you had 8 shares of GE at $13. Okay, but right now GE stock price is sitting at $102, which means since that reverse stock split was implemented, they've actually had a loss in stock price or decline in stock price. And of course that happens, yes, we all know that. But the point here is GE is still sitting exactly where it is in terms of price. Nothing has really changed. Just that your number of shares has actually changed. The point is, should you be buying more shares of GE? It's really up to you. And I see GE as a long-term company, a company that if you can hold and not really worry about the short-term performances, I see them turning things around in the future. But for now, what am I doing? I'm just holding what I have right now. I'm not buying, I'm not selling, because that is just my own position right now. That's where I feel comfortable. But GE is a company that I believe that with the 3 main sectors that they run, they have very good stronghold on aviation, healthcare, and power. Those 3 sectors will remain profitable for General Electric. Now, as long as they can then manage their operations and cut down and go, use lean methods to, cut down costs, and obviously, keep the reliability that they've provided in the aviation world, keep the reliability they've provided in the healthcare sector, I believe General Electric will do well long term. See you in the next one.